What's up, guys? We are going live. We are going to be talking about real estate investing and mobile home park investing and pretty much whatever else you throw at me tonight. We are just going to hang out for a little bit and talk shop. Had kind of a crazy day. We're working on a refinance right now, and that was pretty exhausting. So I figured it'd be kind of fun to sit back and hang out with you guys for a little bit in the studio tonight instead of on the couch. So going a little bit more formal. But if you are just hopping on, make sure to jump over to mariodatillo.tv and drop your questions in the chat. I'm going to be answering them for a while here. Make sure that you're clicking subscribe on the YouTube channel as well. Got a lot of good stuff for you tonight. I wanted to talk a little bit about what we've got going on as a company, and I also want to hear about what you've got going on. So if you're watching this live, or even if you're chiming in after the fact, make sure to go drop in the comments where you're based and what you're investing in. I'd love to hear about different property types you're investing in, whether it's single family, commercial, so office, retail, industrial, maybe mobile home parks, apartments, self-storage, whatever it is that you're investing in. I want to hear about it, and I want you to drop it in the comments below. If you are not on the YouTube channel, go over to mariodatillo.tv and hop on the chat and let me know what you're investing in, and also drop your questions in the chat as well. I am answering questions live tonight, and we're going to talk shop for a bit. So what I want to do is help you expand your real estate investing career and make sure that you're getting the returns that you're looking for. So I'm going to shoot you straight. I'm going to give you the real answers, not necessarily what you want to hear, but it's what's going to help you grow. So jump over to mariodatillo.tv and drop in the comments, in the chat, I should say, what questions you have. I'm streaming. Your best connection is going to be over on YouTube. So mariodatillo.tv. Be sure to subscribe. Hey, guys, want to know what are you guys investing in right now? Drop it in the chat, and would love to hear from you and also answer any real estate investing questions that you have. I'm going to be talking a little bit tonight about kind of what's been going on in our company, what we're learning, as well as why I like mobile home parks specifically for my real estate portfolio. As some of you already know, we own self-storage as well, but we're going to talk a little bit about mobile home parks and why they've been such an attractive asset for us to buy and why we keep buying more. Talk a little bit about some of the team that we're building, and also want to make sure that I'm answering questions and hearing from you guys. That's the whole point of doing this live. So jump over to mariodatillo.tv, hit subscribe, and make sure to make sure to drop in the comments what you're investing in, or what questions I can answer for you. So been kind of a crazy week, last couple weeks. And yes, you can see a difference in the lighting. I am out one light tonight. One of my lights is not in my studio, so I'm kind of working in the dark a little bit. But anyways, so last couple weeks have been pretty hectic. Had the MHI conference last week in Orlando, which was absolutely awesome. Saw a bunch of you there, and got a chance to network. And they have, some presentations and panels and things like that. But really, what that is an industry conference where people talk, where people are talking about what's going on in the industry, and it's pretty awesome. Learned a lot. I think one thing that stood out to me that was really interesting was that across the board, every lender I spoke to, I asked the same question. I said, what kind of headwinds are we expecting? What should we be expecting here? Is there some changes coming? And every single one of them agreed that there's definitely going to be some changes coming in. The headwind is interest rates. Now, interest rates have been ticking up quite a bit this year, as you've probably heard. And although that is affecting single family homes a bit, it's actually affecting commercial real estate, or is going to affect commercial real estate even more, just because the fact that when interest rates tick up, the prices go down. Because if you think about it, if you're buying an investment property and you're trying to generate cash flow, what is one of your largest expenses in real estate? Well, it's interest. So if your interest rate goes up, that means your cash flow goes down, which means you can pay less for that cash flow or for that property, because ultimately, whether it's the property's fault or your borrowing power or whatever it is, you're getting less income off of that property. So you're going to pay less for it. And so um, it was interesting hearing from some of the lenders talk about some of the aggressive borrowing that people have been doing over the last few years, and they haven't been paying close attention, or haven't recognized the fact that interest rates can go up. And when they do, if you get a debt with a very short term on it, so let's say you're getting a bank loan that's 3 years or a bridge loan that's 2 years, and some people are getting multiple years interest only. And yeah, they're getting it at a low interest rate, but if you've got a short-term loan that's going to come due in a couple of years, and you don't know, or you don't recognize that interest rates are going to go up, you might get stuck because at some point you're going to have to refinance that loan. And if your property value came down because interest rates have went up, you're going to be in trouble. You're not going to be able to sell. And so one thing that's been pretty interesting is that, hey, what's up, Emma? Good to see you. We got some people hopping on, so that's awesome. Make sure to jump over to Mario Datillo TV and be sure to drop in the chat where you are chiming in from and what you're investing in or what you're looking to invest in. I want to make sure that we recognize you. And also I want to get your questions answered tonight. So I'm going to talk a little bit about a few things, but I want to hear from you. And the best way to do that is to jump over to mariodatillo.tv and click subscribe while you're over there too. But anyways, so yeah, Emma, exactly. Interest rates matter. Thus underwriting is a different game now. That is 100% true. So think about this. If you get a 3-year loan or a 2-year bridge loan with really low interest rates, interest only, and that loan comes due in 2 years, but then the interest rates tick up a full point. Okay. Now, you got to remember that lenders are looking at more than just an appraisal. They're looking at your debt service coverage ratio. Okay. And one factor that comes in, the main factor that comes into that is your interest payments, right? So they're looking at how much income do you earn over your mortgage. And if that goes down quite a bit, you may not be able to get a loan for what you owe currently. And in that case, you're forced to sell at a discount, at a loss, or lower than what you potentially could have with the lower interest rate. So I think there's going to be some opportunity out there. And it was really interesting to finally hear lenders admitting that, because that is something that I have not heard in years. Hey, what's up, Dimitri? Dimitri's actually chiming in from Belgium tonight. So he was on my live last week. So if you didn't see that, you should jump over to my YouTube channel, mariodatillo.tv, and watch that. Him and I were talking shop. We were talking international tax law. We were talking about commercial real estate, residential real estate, wholesaling, flipping, all that stuff. So we had a really good discussion. So thanks for chiming in, Dimitri. Good to see you. And we had a lot of fun. I'll have him back on again soon. So I'll probably have him on my podcast that's coming out pretty quick as well. But so that was one major takeaway that I got from the MHI conference, and that I thought was very, very interesting to start hearing people admit. Emma actually happens to be a commercial real estate lender. She just said, and MHPs require some of the highest debt service coverage ratios, right? So typically what we see is around a 2.125 debt service coverage ratio. So 25% over the NOI, I should say, over the debt service. So anyways, yeah, so that she's right. You typically, mobile home parks have a little higher debt service coverage ratio than some of the other property types. It's a risk thing that lenders utilize, and those who have been borrowing at very aggressive terms with short wicks may be in a position where they need to sell. So let's see here. I'm getting a message. Anyways, so Dimitri, you said it will be interesting to see how it plays out when people have to refi at a 2% higher interest rate. That's exactly what I'm talking about. it will be very painful. And if you can do it, it's still going to hurt. But if you can't do it, it could be completely devastating to their property. And some people could be losing some property, because what's unique about commercial real estate, hey guys, make sure to chime in, jump over to mariodatillo.tv and drop in the chat some of your questions that you have about residential, commercial real estate, whatever you guys want to talk about tonight. Obviously, know I invest in mobile home parks, so that's my and self-storage, but that's, we could talk about any real estate you want. Happy to talk shop. But yeah, so there's going to be some opportunities where people are not going to be able to refinance, and they're going to have to sell, or maybe we see some defaults coming down the pipeline, which should be interesting. I haven't seen that for a long time. Like when we were buying single family homes from 2008 to 2014, we were buying distressed property. I mean, that's really what we were buying. We were buying from banks. We were buying from mostly banks, but some funds as well. We were buying non-performing loans. We were buying REO and things like that. And it was interesting because you were always buying from a distressed seller. Now that we've had such a great market for so long, we have kind of gotten away from that. We forgot what it was like to have motivated sellers. And so now we're going to start seeing that again. And ultimately, we all knew, in this case, what goes down must go back up again with the rates. And so we're hopefully going to be able to take advantage of that a little bit and be positioned to buy some assets in this upcoming catastrophe that could happen. Now, I'm not saying that the total economy is going to crash and that we're going to crash and burn. It's going to be horrible, but there are going to be some people who are in bad positions because they overpaid. And that's why I think right now it's so important that people remember that even though we want to buy assets, we want to build our portfolio, it's important to make sure that we are still buying things that make financial sense, and that you are buying things for cash flow and not just for speculation. There's a lot of people who have bought things because they could and not because they should. So that's my rule of thumb. Buy because you should, not because you could. Hey guys, if you're just hopping on mariodatillo.tv, jump over there and drop in the chat where you're at, what you're investing in, what you're looking to invest in. Make sure to hit subscribe on that channel as well while you're there. But would love to hear from you guys and find out what you are investing in, or what you want to invest in, or if you got some specific questions. I'm all ears. I'm happy to help you out. That's what this is for. Had a huge training last week, which turned out huge. I mean, it was huge for us in preparation and in results. We had a company training that we had all of our team members come in to Naples from all over the country, and they were in a 2-day training. Our leadership did all the educating and presenting, and we basically take everybody on our team and we try and cross-train them so that they have a much better idea of what the rest of the people in the company are doing. They understand construction, they understand sales, they understand financing, they understand all the different factors of, especially on the mobile home side. So we educate them so that they can be effective as well and be better at what they do and sometimes fill in for other people. Additionally, we had a ton of fun because we worked hard. We had the education side, but then also we did some fun dinners. We did actually a dinner cruise on Tuesday night, which was pretty sweet. Hey guys, if you're just hopping on, jump over to mariodatillo.tv and make sure to drop your name in the chat so I know that you're watching. We're actually live on. Hey, just got a new subscriber. Thanks, Elizabeth. But make sure to hit subscribe over there. We are talking everything real estate, including mobile home parks, any kind of real estate investing you want to talk. Looking at a couple of deals right now. Have an interesting deal we just made an offer on that was a mobile home park that also has some vacant land in front of it. And this vacant land is already zoned and good for self-storage. So being that we're in both asset classes, it's an interesting play for us, because if we can buy the mobile home park that cash flows all of it, and then still have the vacant land that we can develop and put self-storage on, it's a pretty good opportunity and it's a good location. So very interesting deal there. We'll see where that goes. We were within 25,000 of the seller. on our last counter. So I think we'll probably get that deal sealed up. So pretty excited about that. Hey guys, if you're just hopping on, jump over to mariodatillo.tv, click subscribe once you do that, and let me know what you've got going on, what you're investing in, and let me know what questions you have about real estate investing. So let's talk a little bit about refinancing. Anybody who's got some real estate right now, be very prepared for insurance changing. We've got some craziness going on in Florida and a few other states, but I think in general across the country, insurance rates are going up on real estate because there's been so many catastrophic events over the last few years, COVID, all kinds of different craziness that has caused the insurers to either leave markets or jack up rates to cover their risk. So be prepared for that. We've had some really crazy insurance quotes on existing assets of ours. We had one that literally we went from 20,000 to we got a quote for $110,000 for similar coverage. I shouldn't say similar coverage because we did increase the replacement value, but still, it was just insane. So be really prepared for insurance hikes. Hey, what's up, Nate? Looks like we got Roxo on. He's actually out of the Northeast, but what's up, Bill? So these guys we go back a long time. Nate and his dad, Tony, are big time apartment investors out of the Northeast. And Bill Ham, many of you already know he's got a pretty strong presence on social media, and he's got a YouTube channel and other things. He's also a big time apartment investor. These guys are longtime friends of mine, and we go way back. So they've done some pretty awesome deals heading to that TAC course. Oh man. Yeah. They asked if I wanted to go to a tactical course and do some shooting together, and my schedule just did not allow, but they're rubbing it in because they're going to have way more fun than I am tomorrow. But so, hey, hope you guys have fun. Shoot some stuff for me, and I'll catch up with you guys in the next one. Make sure to hit up Mary Max in Atlanta while you're there too. It's my favorite Southern cooking spot. But anyway, so hey guys, what questions you guys have about real estate investing? Let's talk. Actually, if you got a question about apartments, drop them real quick. Drop them in the chat real quick before Bill and Nate hop off. Maybe they could answer them for you too. But so hey Nate, real quick before you and Bill run, what are you guys seeing for interest rates on apartments right now? You guys have anything in the works that you are buying or refinancing where you've gotten some term sheets lately? I'll give you a second to drop that in the chat, but I'd be interested in hearing, because we have a deal that we're buying right now where the lender actually just retraded us a half point right before closing. And so I'm curious if that's happening to you guys. So let me know. Oh, let's see here. He said, we spoke earlier about debt service coverage ratio and rates increasing. Yeah. So are you seeing that with your current deals? I mean, are you seeing some stuff get a little dicey on the interest rates? You guys have any term sheets on the table that have maybe changed last minute or anything like that? And what kind of rates? What was the last rate you saw on a term sheet? Just curious. I know, I don't know how active you guys are in buying stuff right now. I know you were selling some things, but yeah. So anyways, what I was saying is, so we had a deal. Oh, he's cutting me off. So let me make sure I get this on the screen. Spoke with Fannie lender today and telling me minimum of 4.5 and likely closer to 5, underwriting everything at 5. Yeah, that's literally what we're seeing too. We had a deal that we were quoted 4.35, and there were some delays because the seller needed to get a couple things resolved, and he was slowing it down. And our lender came to us and said, look, we've got to bump it up to 4.85. There's just no way that we can stay at 4.35. Really, we should be at about 5 and 5.15%. But they were kind of giving us a break, right? So we were not happy about that. But yeah, that's kind of what I'm seeing too, 4.5 to 5. So those who bought at 3.5, 3 3/4, I mean, you're already at a 1.25 over, 1.25 point over what you were when you bought. So just that's not, and we've already had 5 rate increases since January, which is absolutely nuts. So if it does another 5, those people who bought and paid too much, I should say, at 3.75, 3.5 are going to be hurting. And I have no problem with buying things at low interest rates. That's what we do, right? But the point of this whole discussion is that you should not be overpaying for assets, because what goes up must come down. And in an interest rate case, what goes down must go up, especially when you're artificially low. So Dimitri said that means that cap has to be 7% or more to make the spread high enough to compensate for risk of the leverage. Yep. Um, um, anyway, sorry, I'm adjusting something because I'm about to bump the camera with it. Okay, so yeah, that's exactly right, Dimitri. Without a 7% cap rate, you're not going to be in a real good position. And so there's going to be unnecessary risk for anything lower than that. I had a guy send me a deal, a broker sent me a deal today. Super good guy. He sent me a couple off markets and they were like 3.5 cap and 4.5 cap. And I'm going, I just said to him, I said, who can buy at a 3.5 cap these days? The rates are higher than, like the rates are at, I don't know whoever bought a 3.5 cap anyways, but, for a stabilized asset, 3.5 to 4 cap, when your interest rate is 5, I mean, that just doesn't make any sense. So Nate said, selling my low-income housing tax credit assumable loan for 3.07 to a guy with large 1031, couldn't pass up the profits, but can't find anything that meets our terms to 1031 into. So likely paying capital gains and waiting for the next year to purchase, starting lending our cash out at hard money rates again. Just got 14% and 4 points on a loan I wrote this week. Can always make money, just change strategies. I love that comment at the end. He's exactly right. You can always make money. It's just you've got to pivot. You've got to change your strategy, got to do something different. And 14, so basically, and I'm sure he has a minimum payoff period. So if he gets paid off too quickly, I'm sure he's got some interest that he gets paid regardless. But that's some pretty sweet returns at 14% interest and 4 points. Yeah, I mean, I think there's a lot of people who are 1031ing out of things, but then they're going, crap, what do I put this into? And they get, like Nate, you got to pay the taxes sometimes. But honestly, Nate, it's probably not a bad thing, because I don't think interest rates are going down anytime. I'm sorry, tax rates are going down anytime soon. So paying taxes today is probably not a bad thing versus paying them tomorrow. And yes, I do understand, for those of you out there that are thinking in your head, yeah, but you can build up cash and reinvest it and multiply that money faster without paying tax. I agree. But so I'm not against 1031s, just, sometimes it makes sense to pay the taxes. So Dimitri says, yes, always changes with cycles. Yep. And Nate, 90-day loan. Oh, geez, with 3-month extension for 2 more points. Dude, that's pretty aggressive. I'll end at those rates. So yeah, that's somebody must be confident. Just real quick on that. Is that a residential loan or a commercial loan that you're doing? And what kind of loan to value or loan to cost are you lending on that, Nate? Agreed on taxes, waiting for market cycle to change. Right. So you might have to pay a little bit of taxes, but at the end of the day, not a little, probably a lot, but at the end of the day, if you can then take that cash, set it aside, and then buy assets at discounts maybe next year, like he's saying, then it probably makes sense to do that. Nobody likes paying taxes, but sometimes you just have to. And or at least it's more strategic to do so. So I know there's some people out there that just swear by not paying the taxes and 1031ing and 1031ing and 1031ing, but I'm not one of those guys that's married to it. So Nate, was that on a residential or a commercial deal that you did that you're doing that bridge debt on? Just curious. Hey guys, if you're hopping on, jump over to mariodatillo.tv. Make sure to hit subscribe when you do that, and then go into the comments or into the chat. Make sure to drop in the chat where you're at, what you're investing in, or what you're looking to invest in. Maybe hit me with some questions. We've got some pretty serious players on live actually in the chat right now, which is kind of fun because they can actually answer some questions too. But we've got Dimitri Van Camp over in Belgium, who's investing here in the United States from Belgium. We've got Nate Roxo and Bill Ham, who are both very sophisticated apartment investors, all three that I know very well and have been good friends for a long time. Anyway, so LTV 40%. What is that? LTV 40%. So I asked Nate, if you're just hopping out, he's lending at 14% and 4 points. I asked him what kind of loan to value is that on and what type of properties. And he's lending at a 40% loan to value. No brainer for you. Yeah, I agree. You will find more people needing hard money when banks start tightening strings. Absolutely. So there's going to be people who was that on a commercial loan or a residential loan? Just curious, Nate. Can only lend hard money on investment properties, not primary homes. This was a 6-family worth $1 million, lending about $350. That's a no-brainer deal. We've bought some loans and that was a first mortgage. So yeah, that's a no-brainer deal. 14%, 4 points. Some crazy low 40% loan to value. On a multifamily performing asset. That's just, I assume it's performing, but regardless, that's crazy. So he's right. There's going to be some people who are buying real estate today or bought real estate in the past and have to refinance and they need hard money just to bridge because the lenders won't lend them the amount that they need, or they're buying things and they can't get the loan that they want. So now they're going to go hard money instead of just either buying at better prices or, sitting out a little bit or buying different asset types. So he's right. There are going to be some lending changes. Changes in lending. They're going to be tightening up. Especially when things start to look ugly, banks pull out fast. The first lender type that just bails is the CMBS world. They're like lights off. They're done. They're totally out of the market overnight. It's unreal. Some of them go bankrupt really fast. It's just really crazy. And so, I remember back in 2007, 2008, I guess, when all the banks were stopped lending and it was like nobody wanted to touch real estate for a long time. And it was a great time to buy. We were buying a lot of real estate from 2008 to 2000, well, till now. But, in that downturn, there was a lot of opportunity, but I'm not going to lie, it was scary just because you didn't know how far the market was going to go down. You didn't know if it was ever going to come back, and you didn't know where the buyer was going to come from because there were a lot less buyers out there if you were going to sell. So it is scary to do, but it is very, very profitable. And it's smart. Well, what's the quote? Be greedy when others are scared or fearful, and be fearful when others are greedy. And right now, I think we've had people greedy for a very long time. Nate, this was a refi. Guy needed hard money to pay tax liens, and lenders wouldn't touch it without all liens being paid off. So yeah, you pretty much bridged him to make that deal work for him and be able to make it so he didn't have to either default on the loan or sell. So that's pretty cool. And that's a really sweet deal for you. We've bought some performing loans on a few occasions where they were just ridiculously low loan to values and high interest rate, and it just made sense to buy them. We don't typically buy performing. We typically buy performing loan. We don't typically buy performing loans. We typically buy non-performing loans, but in those cases, they were on investment property as well, and it just made sense to buy that debt. What's up, Martins? All right, we got another park investor on the line. I was starting to get a little nervous. We had all apartment guys and single family guys, and so I needed a mobile home park guy jumping on to back me up. So what's up, Martins? Love to learn about how to go. About doing what Nate Roxo is doing. I'm freeing up about $1 million with no home at the moment. Yeah, so there's bridge lending, hard money lending is an interesting strategy and a great way to bridge the gap, especially between, your next investment. He said, I'm watching out for MH, RV, and storage opportunities, but also not sure about short-term fire sales. Yeah. So what's interesting is, if you've got, yeah, totally agree. I'm watching. So I'm not sure you have a question mark at the end of that, Martin. So I'm not sure if you're asking me a question or just slipped the one in there. But bridge lending is awesome because when you have capital come back and you're looking for a long-term home for that capital, if you have some borrowers that are experienced investors and only need, capital for a short period of time, it allows you to then lend to them at higher than normal interest rates with some, fees, some points, and know that you're going to have your money back in 3, 6, 9, 12 months. So where you're not deploying it for a really long time. And especially in a market where, you may not be 100% sure on where things are going to be 12 months to 18 months from now, it's a good strategy to be able to lend your money for 3 to 6 months and know it's coming back and you're earning a great return. And then as soon as the money comes back and you've got another deal lined up, you can then invest it in long-term stuff. So it's a cool way to bridge. So I love that Nate brought this up. And he said, Martin said, short-term fire sales when interest rates rise and over-leveraged investors lose the asset. That's right. And that's what I was kind of talking about. I don't know if you're on when I started talking about this, but people have paid way too much for too long, and interest rates may catch up with them, and they were buying just purely on a spread, and a very tight spread at that. So, yeah, there's going to be some stuff that comes back. Either people need bridge loans to refinance, or they need to sell, which is kind of what I'm looking at. So one thing that we look at is non-performing loan markets to kind of gauge where the market is. And more importantly, it's kind of an alarm for us when we start seeing non-performing loans coming to market. We know that asset class is starting to see some distress beyond just like short-term blips. And I have seen a fair amount of non-performing loans, especially, in the states that were affected most by COVID, with the hospitality world and even some apartments, like New York. I've seen a fair amount of non-performing loans come back in New York. Hospitality kind of all over the place. I'm trying to think of what else that I've seen non-performing loans being sold. But that's kind of like the precursor to the default world. When you know that banks are trying to rid themselves of some non-performing loans, if they don't sell that loan, or a lot of the banks don't actively market and sell loans, then that means there's going to be some assets coming back through foreclosure that may be an opportunity to buy. Hey guys, if you're just hopping on, jump over to mariodatillo.tv and hit subscribe when you jump on there. But drop in the chat what you're buying, what you're looking to buy, maybe some questions. Nate said, reach out to mortgage brokers and ask them to refer you borrowers who have cash and solid, but for one reason or another can't get traditional financing. Great way to get referrals. Yeah, I love that, Nate. That's a super good strategy. And, that's a great way to find borrowers to lend your capital short term on. Some different things about that too. Make sure that you know what you're doing on the lending side. You've got good documentation, meaning your good note mortgage, guarantees, all that kind of stuff, that you've had an attorney help you put that together, and kind of what you need to do to protect yourself. Because obviously if things go bad, which they can when you're lending 14% and 4 points, right? So make sure that you have your documentation, your ducks in a row, basically, to be able to protect your investment. But super good advice, Nate. Hey guys, if you're just hopping on, drop in the chat where you are from, what you're investing in, and if you have any questions about real estate, make sure to drop that in the chat as well. I'm live for the next few minutes here still. Get good attorneys with experience in notes and mortgages. Yeah, that's a really good point too, because I think what people do a lot of times is call their general practitioner for any kind of real estate deal. I would say between attorneys, insurance agents, probably attorneys. We have more attorneys in our contact list than probably any other vendor. And that might sound crazy, but you have to, because using general practicing attorneys is pretty risky. It's kind of like a doctor. You wouldn't use a general practitioner doctor for a very specific, surgery. You just wouldn't do it. And so something like what Nate's saying, if you're going to start investing your capital on the lending side, kind of doing bridge and hard money lending, you need to make sure that you've got somebody who has expertise in that and knows what things should look like. Yeah, you can write good legal documents, but there's some business practices that those guys are not going to be aware of, that the people who are that the attorneys that are focused on it are aware of, and they're going to make sure your stuff is really tight, and they're going to be able to give you advice. So yeah, super good points. One thing I promised that I would mention or talk about why I like investing in mobile home parks towards the beginning. And one reason that I like mobile home parks so much is they're in high demand. Affordable housing and even apartments have this factor too. You've got high demand for affordable housing. And so buying assets, and kind of this whole theme of this call tonight seems to be more on distress distress and, lending changing. But, you know, what I would say is really important is that you should be investing based on where you think the economy is going. Meaning, if you think the economy is going to go really, really well and people are going to have a lot of dispensable cash and they're going to be buying luxuries, then you should probably be buying Class A apartments. You should be buying, high end retail and office and things like that. But if you think the economy is going to turn, it's going to go the other direction where a lot of people don't have extra cash and they're strapped for housing expenses, then you probably want to be investing in things that people are going to be able to afford, like affordable apartments. So like B and C apartments, investing in mobile home parks, investing in storage. People move out of apartments and other things, and they rent storage units for that reason. So you just need to position yourself and invest in things that are going to do well in in an economy that you expect is coming down the path. And I think you can tell where I stand on that topic. But also, for mobile home parks, you've got minimal competition because there's not new mobile home parks being developed very often. And it's pretty hard to get the zoning for it. So there's limited supply increase. A lot of other property types, you can put one up across the street, and now you've got a building competing with you that wasn't there before. And then also cash flow. Mobile home parks are great for cash flow. We have low expense ratios, and they're just a great business. They're not easy money. They're not passive income. They are an active property type that you have to either manage or have somebody manage for you, but they are great for those reasons. There's a bunch of other reasons too why mobile home parks are awesome, but those are kind of the top three I just wanted to mention. So if you guys just hopped on, jump over to mariodatillo.tv and drop in the chat over there what you're investing in, where you're at, physically where you're at, and maybe if you have some questions about investing in real estate. I've got some pretty awesome guys actually in on the chat. I'm just going to name drop a little bit. We got Paul Martins, who is heavily involved in SECO, the Southeast Community Owners Conference, which is a big manufactured housing conference event. He pretty much runs the operations of that. And we've got Nate Roxo and Bill Ham on. They are both very experienced apartment operators. And we've got Dimitri Van Camp, who is actually wholesaling and buying single family homes in the United States from Europe, Belgium to be exact. And so, yeah, it's pretty cool to have you guys on, and love all the feedback. Love all the feedback that you guys are giving live here on the chat for everybody. So Martin's just said, getting back to MH, I'm not super excited at the moment on value add due to supply chain issues and infill. So we're talking serious technical terms here, but really what that means is he's not super excited about mobile home parks that have a lot of vacancy, a bunch of vacant lots that you have to bring homes in, because there's issues with getting homes right now. The manufacturers are super delayed. Many of them are over a year out to get inventory. And so if you buy a park that has a lot of homes that need to be brought in, you don't know how quickly or how slow it's going to take to get those homes. The costs are fluctuating a bit. I agree. There's definitely a lot of risk in that. We are filling up our existing parks, but we're not necessarily buying parks that require tons of infill and projecting as though we're going to fill them up in a year or two. So totally agree. He said, additionally, increase costs and interest rates, shrinking the pool of buyers in many markets. Yeah, I agree. There's definitely There's definitely interest rate expense here, both on the acquisition for the park side, but also on the mobile home side. And I think we'll see more of that in the single family world as well, because um, every half point, quarter point, whatever, tenth of a point that goes up, that means that house or that mobile home gets more expensive, just purely because most people are buying with leverage. They're buying with debt. Arthur, what's up, man? Brother, by the end of 2022, I'll have between 50 to 60K to invest and a credit score of above 730. Do you think I'll be able to find a small park to invest in, or is it not enough money? Thanks. Dude, that's awesome. So glad you're working hard, saving up the money, and working on your credit to make sure that you're in a really strong position to make good financial investments using debt. So we've talked about a lot of negatives on the debt side tonight, but there's a lot of positives on debt, and that's being able to multiply your cash with the bank's money. And what Arthur's saying here is that he's worked hard to save up money and build up his credit score. So to answer your question, do I think you'll be able to find a small park to invest in, or is it not enough money? So you can buy a small park, absolutely. I mean, if you could buy really with your 50,000 with today's loan to value, you could buy somewhere around a $200,000 mobile home park. Of course, that doesn't take into consideration closing costs, maybe some initial capital that you need to set aside for operating, or maybe some improvement dollars. But you can find some smaller mobile home parks that, especially maybe have been left alone for a while, we'll call it, meaning that the seller is not very active managing it. They haven't put money into it. They haven't been taking care of it. They're not following industry best practices. And in that case, they just need to get out. We've talked about motivation a lot tonight, and there's always motivated sellers in every market. There's just more in some than others, depending on what's driving that motivation. So your capital can be deployed in a smaller park for sure. It's not going to be a large park, obviously, but that doesn't matter. I think the most important thing is that you buy what you're comfortable with, okay? And also buy as large as you can, okay? And the reason I say that is because the smaller the park, the more your expenses are going to affect your NOI. So example, to fix a plumbing break at a 100 space park is going to be the same cost as fixing a plumbing break at a 20 space park. The problem is you make a lot less money on a 20 space park, and so the effect of that expense is going to be significantly more painful. And so if you lose 1 to 2 tenants on a 100 space park, you're going to feel it also a lot more. I'm sorry, 100 space park, you can feel a lot less than a 20 space park. So that's why I say, I'm not telling you to go out and buy, more than you can take on or that you're comfortable with, but I am telling you to buy as the largest park that you can possibly buy, because it is going to give you just more cushion, and it's going to be a safer buy. Martin said, Arthur, I started with that amount, and it is possible. You need to make sure that there's enough cash flow to cover all the costs. Yeah, that's exactly what we're talking about. On the smaller parks, one blip can really kill your cash flow for the month or for the year. So it's very important. And Martin says that he started out with about that amount, but he's got a pretty awesome portfolio now in multiple states and built it up quite a bit. So that's pretty impressive. You're welcome, Arthur. Stick around. Let me know what other questions you got. Those are good questions. But he's built up, Martin's has built up a pretty awesome portfolio, starting with, like you said, a lot less. Let me also drop something in there too about, you don't necessarily need to have all the cash. What I mean by that is, if you find, let's say you're out looking for a 20 space park that you're going to invest your 50, I'm just making up the lot count, depending on your market, that may or may not buy you a 20 space park. But let's say you're out looking for a 20 space park, and that 100 space park comes up, or that 50 space park comes up, and you're like, oh man, that is just way outside my buying capabilities at this point. Don't worry about it. All you need to do is line up some partners, okay? Or you can also wholesale that contract to another investor. And, what's awesome is there's guys out there like myself that if you bring me a deal, you can either assign the contract to me, or we can talk about, instead of taking an assignment fee, we can roll that assignment in as equity, and you can actually own that property with us without having to operate it. Team up with some experienced operators that way and just do what you're good at, which is finding good deals. So Arthur, don't feel like your capital is going to restrict you. Look at everything, and the deals that are too large, either partner or wholesale. The deals that are in your sweet spot, buy them yourself. Okay. And that's how you can continue to buy and take advantage of every opportunity that comes up. There's a lot of people that pass on large deals just because they don't have the money. And that's a huge mistake. So I've got about 2 to 3 minutes before I hop out. If there's any other questions, make sure to drop them in the chat. I'm over at mariodatillo.tv. Make sure to hit subscribe on the channel too. That way you get notified whenever I do a new episode, or I do anything on YouTube, more of these live videos, things like that, because I'm putting out YouTube episodes once a week. Arthur said, I also have about 20K in crypto, but with crypto, we never know. Truth. There's a lot of truth in that. So you never do know what the value of that crypto is going to look like tomorrow, let alone next 6 months or next year. And I'm not anti-crypto. I've dabbled in it, but it's definitely way more speculative, and it is something that you should be investing in only if you can afford to lose and you are comfortable not to need it at that moment. Because it may not be there for quite a long time. We saw the last, not to get into a whole crypto discussion, but the last cycle was pretty slow. So, you look at, and I'm not going to name dates because I don't know those exact dates off the top of my head, but it was several years that, Bitcoin dropped and was pretty much bottom pricing, and then it just shot up again. And that's what crypto is. So totally understand. You could probably, I don't know if you can leverage that crypto and roll that into real estate. It's pretty risky, but something to consider too. Anyways, all right, guys, this has been a lot of fun, and I appreciate all the input that everybody has given. Make sure before you hop off the page, click subscribe and drop in the comments afterwards. If you're watching this after the fact, after the live was over, I'd love to hear from you as well in the comments on whatever platform you're watching this on. And I promise I will respond and make sure that I get back to you in those comments pretty quick. So thanks again, and look forward to seeing you guys on the next live. I got another episode, a YouTube episode coming out next week. So make sure that you check that out. And I did a cool interview with Katerina Stefanova a few weeks ago, and it just went live, I want to say yesterday, on my YouTube channel. So make sure to watch that. I kind of interviewed her on how she bought her first park, and most importantly, where she came from. She was a immigrant from Russia and had no commercial real estate experience, just maybe bought a couple of homes and then scaled up to a portfolio of over 900 lots. So very interesting interview that I think you will get a lot out of on my YouTube channel, mariodatillo.tv. That was the most recent episode I just put out this week. So from there, guys, thank you. And I will catch you guys on the next one. Have a great night.